Up only.
10, 9, ignition sequence start. 6, 5, 4, 3, 2, 1, 0. All engine running. Liftoff. We have a liftoff.
Up only.
Hello and welcome to Up Only TV. I'm Ledger, here with Cobie and the Return of Light. You definitely didn't see me mess things up just a minute ago. It was totally fine. Everything was fine. We're here now and we are presented by Blockfolio. Go to uponly.tv/Blockfolio. My God. You can swap directly from one asset to the other. You should see Cobie's face right now. Trade with zero fees on Blockfolio. They've also got 8% interest on deposits up to $10,000, 5% after that. It's a pretty awesome deal. Thank you to our friends at Blockfolio for being our partners. Once again, uponly.tv/Blockfolio. Let's get to the show for real this time, huh? How about it? We can try. Cobie, how you doing?
That was incredibly smooth. It was like you didn't need any practice. You're a natural.
Definitely wasn't the second time we did that. We've got Light Crypto back on the show by popular demand, I guess, right?
Yeah, you've although the description of the show says Cobain is back with Loom friends and friends from Eagle Capital, which is not correct.
I definitely changed it. I definitely changed it in one place, but not both.
So Light is back by popular request, but most people said, can you make sure that he comes back drunk? And
I don't think we're going to succeed there, are we?
Yeah, we need to know, Light, are you drinking? Are you drunk? Are you sober?
The markets are much too sobering to be drunk for this one, I think.
Well, Light, you can do whatever you want, but it's evening for me, so I'm cracking one.
Yeah,
Please.
What time is it where you are, Ledger?
It is, I don't know, 6. It was supposed to be 6 when we started. So a little after 6, naturally, in typical up-only fashion.
It's midnight for me. Get started at midnight. We'll be done by, I don't know what time it is. Well, Light is. Maybe we'll be done by 2 or 3. Yeah. Light, welcome back. Thanks for coming on again, mate. How you doing?
I'm good, man. Thanks a lot for having me. 8% sounds incredible, by the way. I didn't get paid to say that, but that's pretty sweet.
It's up to 10K, and then I think it's, I don't know about unlimited, but up to 5% with a lot of money, like all the stuff beyond 10K. So yeah, shout out Blockfolio. I got to try it.
You haven't tried it already?
No, they just announced it today.
And you went straight on it, first one there in the door. Actually, how come we don't get like beta access or something? Then we could be like really good at shilling, because we could be like, we've been trying it out all week.
Yeah, I know. I couldn't even download the video off Twitter. I tried to use it in the intro, like the updated video with the interest rates and stuff, but I couldn't even get that right. Which I know the audience is not surprised, based on my performance so far tonight.
Anyway, like last time you were here was the big brain stream. We were uptrending. Everything was great. Coinbase IPO was ahead of us. Bitcoin was $50,000. Ethereum, I think Ethereum was the same price as it is today. So let's pretend nothing happened. We're going to be rich. But it's been a little while. How have you been? What have you been up to?
I've been still trading on the backside, but spending a lot less time. I think that it's a much simpler market now, and it's a lot less emotionally sort of demanding.
I mean, that might not be true for everybody. Like,
yeah.
Just see the state of my Twitter replies, mate. It's tragic. It's a tragedy.
Yeah, fair enough. But you've been there and seen that before a couple times.
Yeah, that's true. So you just like chilling? Are you like just enjoying your life?
Yeah, I'm trying to figure out what to do with it after, because I think that there will be some quiet times in the coming few months to a year or 2 years, and I think that, like, you put aside so much of your life to get immersed in crypto, and that's been the story of my life for the last 4 years. So now I'm kind of thinking about going to a cabin in a couple weeks or months and just sitting there for a week and kind of looking back and then seeing what I want to do going forward until crypto comes back.
Light, somehow I knew you were going to come on and be bearish, but I didn't know it meant like cabin in the woods, disconnected from the internet levels of bearish.
Yeah, just temporarily. Like I think that the simplifying model that I've been using for the past few months and that I continue to use has been sort of the icon that you kind of posted in the center, which is this idea of a roller coaster, a Euthanasian roller coaster, right? Where you have one giant parabolic move followed by smaller and smaller pumps as volatility collapses. And I think, there's some pretty good explanations for why that happens. But the one that sticks out to me is that as the prices move up, in January, February, April, most of the supply exists on exchanges. It exists in wallets, but it's really locked up. People refuse to sell on the way up. And then you have kind of like a heart attack, right? So you have that crash in April. And suddenly all of that supply becomes unlocked because people go from being risk loving to being risk averse, and people start considering selling. And so you keep seeing bounces that are lower and lower as they're smothered by people who bought something at $1 for half a cent. And they start selling the supply that's available into the market and smothering these bounces rather than it just going parabolically up. And in that sort of market, you have to understand that with alts, I think structurally, there are no natural buyers. Alts are a speculative vehicle that people buy because price goes up. That's what draws attention to them. That's what creates optimism for the future because they're seeking to replace Bitcoin. And once the price crashes, that key fundamental variable is pulled out of the market. All of the oxygen is pulled out of the fire. And then you have to contend with the fact that, by my guess, I think you have about $200 to $400 million of alt emission or inflation from, DeFi LP, proof of stake, MEV, Ethereum mining, and just unlocks of VCs that bought 1/100th of the price that you see today. And someone has to absorb that, right? So there's it's like the pyramid of the Louvre, which our ETH friends are probably seeing today. You need to have more and more people come in at the bottom to absorb this and to continue buying it up. And then once it breaks off, the whole thing is kind of broken. And then you need to start having volatility collapse, right? So that's the idea of this roller coaster. And it's a very simple model, but it's one that's been very helpful to me in trading the past few months. And I think that it will be for the coming months as well.
We have a lot of stuff to break down there. First off, where are these parts that go up? Because it's just like it goes like this and just hovers either sideways and then it breaks down a little bit and then hovers sideways and breaks down. We need that little loop back up so that some of us can try to exit. Isn't that part of the soul cycle?
And I think that's the problem, right? Because the dead cat bounce that people wanted actually happened, but it didn't really happen because headlines were so bad in such a quick succession that the bounces were smothered. So you had a dead cat bounce. It just happened not to go up. It stayed in place when it should have really gone down. I think you've seen over the past 3 months, at least in my experience with markets since 2017, probably the worst stretch of pressure and bad headlines that I've ever seen in my trading of this market. And so it almost was that you had a dead cat bounce, but it didn't go up. It just managed to stay flat because people started buying at what they believed to be discounts.
Yeah, I think that's true. I mean, if you look at the Bitcoin chart, I can't tell you a time in history, I don't think, if you look at the daily or the weekly or whatever, I can't tell you a time in history when it's looked this bad. Just a massive rounded top into oblivion with zero bounce. And then 10 weeks, maybe, of ranged price action, which is just angled down, pointing to zero. And It sort of looks like that chart from the 1700s or whatever, the South Sea stock chart, where it just went like just round trip straight to zero. Is it the Einstein chart? Was Einstein around in the 1700s?
Yeah, like the Eiffel Tower setup.
Yeah, it looks the worst it's ever looked. And if you look at the Bitcoin chart and compare it to the ETH chart, they're very similar. ETH got the blow off top and like had that additional parabolic month, but it didn't really have a decent bounce either after it crashed. Like, it's slightly better than Bitcoin, but like not by much. And then as you go down the market cap chain, so go from Bitcoin down to ETH and then down to like Solana and just keep going down, as your assets get much more to retail, things had a lot more of a like the complacency bounce that you would expect from looking at, your Wall Street cheat sheet shit or your like your meme bubble charts. All those assets, they had much more of a traditional complacency shoulder, whereas Bitcoin and ETH is just down only. Just fuck it. No, there's no one to bid. If you're bidding, you're just giving an exit for some dude who's got 50,000 Bitcoin and he's just like waiting for a higher price. I was like, fuck it, you can have mine.
Yeah, I don't know, man. I do agree with you. There were some complacency shoulders out there. Like, while you were gone, I was able to trade some of those on like DeFi stuff. Like Compound had a pretty good one, and like Aave went and retested under its like the lows of where it distributed at the top of the market cycle. But yeah, like Bitcoin especially, there's no bid. Where's the bid? Is there ever going to be a bid, Light?
Right. So, like, you know what? There's a lot of hope out there because I think people realize that they have a lot of natural beta to the space. And so we all make more money when the bull market comes. And I think that sort of bias is very strong. And people are some people are self-aware of it. Some people might not be if it's their first cycle. But you look at something like GBTC trading at a 13 to 15% discount. For any sort of long-term allocator, GBTC makes a lot more sense over a year or so, because you're just buying something at 88 cents, and you're intending to hold. So clearly, there's a lot of talk about funds coming on, institutional interest, and there is an institutionalization of the space. But it is not enough to absorb the supply that's been unlocked by the crash, because people have gotten smarter this cycle around because they were around for 2018. You saw this cycle collapse so quickly compared to 2017 and 2018 because people promised themselves that they would never repeat the mistakes that they had in 2018. And now everyone else who hasn't necessarily sold as much as they want is kind of stuck waiting for a bounce. But when everyone is in that situation, the bounces get smothered much more quickly. I think Cobie's dead on. I share the same view. If you look at the chart, it's almost impossible to be a bull unless you have some sort of terrible Stockholm syndrome, because it looks just like a train wreck in slow motion, right? And crypto is a fairly sort of new industry, and so there's a lot of edge to be had. And sometimes when you just see that there's more supply than demand, that's all that you need to know, right? There's plenty of bull arguments being kind of paraded around. I think most of them are fairly weak. I haven't seen one that is really compelling to me so far. But looking at the chart, at the end of the day, this is a reflexive asset, and the fact that it looks like it's bleeding out generally tends to result in some form of capitulation. Now, whether that's a grind down or a liquidation cascade doesn't really matter, because the end result for most investors and participants is the same. I think the vast majority of people are starting to wake up to the idea that things don't look so good at different points, right? Some people thought about this earlier. Some people are realizing it now. Some people haven't. And for them, an interesting thought experiment would be to imagine if you could sell every single bag that you had into cash, and then ask yourself the question of whether you would rebuy those bags. And I think that for most people, that answer might be sort of like illuminating, because they're holding bags that they wouldn't rebuy. Some people obviously have liquidity constraints, and they just can't get out. But for others, I think that exercise has tended to help me before. And the moment that you realize that, let's say that you decide that your exposure is not what you want it to be, is not the moment necessarily that you should sell, right? Tactically, maybe you want to sell later on a bounce. And you have been seeing some bounces, I think, that cause people to have optimism that the market will come back. But generally in 2018, what I saw and what I think is working now is just to assume that the market is in a bear market and that any bounce should be sold ruthlessly, as opposed to selling during capitulations.
Yeah, I think that's actually a really good point, and something that you have to fight your emotions, you have to fight your sort of natural feelings. At the point when you want to sell, it's a very useful signal to yourself that you should sell soon, but you should not sell at the exact moment you want to sell, because the exact moment you want to sell is always the bottom. The moment when you're like, it might be a local bottom only on a 30-minute chart or something, but when the feelings take over and they're like, fuck, I've got to get out now, this is actually going to zero, like, you make your decision to sell, just like hold on to that feeling for a little bit and just exit on a bounce. Because what I see most people doing, and I did myself in like 2013 or 2014 or whatever, was like get this emotional feeling of shit, I want to sell, like this is going to zero, I'm fucked. And then when the bounce comes, they like change their macro thesis on the 30-minute chart and go, wait, no, look, it's bounced. It's gone up like 1.5%. It's going straight back to all-time highs. And they don't sell the bounce because they have that hope of like, well, I don't want to sell the bottom, even though they were considering doing it a second ago. If you haven't realized yet, chat, this is a bearish propaganda episode. This is the only way I could get Light to agree to come on the show. But Light, so far you're giving like mild bearishness. Like you're saying like, 2-3 year, maybe like 1 to 3 year bearishness. You're gonna go live in a cabin and do some mushrooms and then come back for another bull market. But I'm gonna like one up you a little bit just to hear your thoughts on it. What if like this decade-long crypto super cycle, Bitcoin from a fraction of a cent to 60,000 in like Ethereum from like 1 cent or something to 4,000 over the course of 5 years. If this super cycle of speculative crypto coins was a siren for the market top of the multi-decade long everything bubble before major economic regime change, because it's got out of hand. And not only is this a local top, this is actually the macro top forever.
Yeah, I mean, the short and painful is that I probably lie in that camp. I want to preface this by saying that there's been a bunch of times when crypto has been called dead to rights. This come back because it constantly evolves, right? It was built to be anti-fragile. DeFi and NFTs came when no one really expected them to. And so I think crypto will continue to surprise in the moments when we all think that it's dead. But we're nowhere close to that point of a bear market in which people think that the space is dead. And so now I'll kind of pivot, and I think that there's a lot of reasons why people will get to that point. The first is that for the first time, crypto is facing true regulatory pressure in the form of the first or second or arguably first most important country in the world looking to kill speculation on cryptocurrencies because they have studied it and have created a replacement in DCEP. And I'm speaking about China. Someone told me, and it kind of resonated with me, that he doesn't make it his business to long assets that the strongest people in the world are looking to kill. China is a no-brainer. People have caught up to the curve on where China is. That will continue, and you'll continue to see negative headlines come out of China over the coming months and towards the end of the year. But America is also quite problematic, as is Europe. Anything from the travel rule to stablecoin regulations, because for the first time, crypto became large enough. It achieved a critical mass that regulators were forced to pay attention, and they learned enough about it to understand it. And you could see this in the congressional hearings, where most crypto people don't really agree with the views they're espoused, but these are the views of like legislative entities in the United States. If you read between the lines, you'll see how concerning it is that, people like the Uniswap Foundation thought it was so important to fight the current political climate that they immediately sold $10 million of token to do so. And so you have this first time when crypto is challenged by the global coordinated regulatory regime. And it's at its point where it is the weakest able to defend itself, because we moved away from sort of the tenets of Bitcoin, which was decentralization, towards more centralized, higher throughput chains whose entities are immediately identifiable and also able to be pressured by regulators. You also potentially have sort of a multi-decade macro top, right? Where epitomized by meme stocks, by the leverage within equities, by the fact that if you go on TikTok, 14-year-olds believe that stocks only go up. As soon as that happens, and I'm sort of like a very sort of emotional market participant, I start wondering who else is left to buy in. Anytime the market takes for granted the Fed backstop or the fact that there will continue to be monetary expansion, it makes me concerned that people have run too far and that there's a greater chance of a surprise to the downside. Crypto has never faced a global macro risk off cycle, a true one, the way that 2008 was or 1929 was.
So, like, are you calling for full recession?
No, I don't think that I make money by making calls like that, right? I trade crypto because I know crypto, but I think it's one of the risks that you have to evaluate when you're making allocations of capital in this space. Because if that is the case, if that is a material risk that exists in markets, it means that crypto is going to get face fucked, right? Because it's one of the most speculative assets out there. I can't, other than Charizard first editions, I can't really think of something that's more speculative. And I would just go back to the initial sort of preface that I made that, you know, you can be very optimistic on the technological development of the space, but don't expect prices to reflect that for a very long time, if ever, right? Because we've had reflexive bubbles in the price that may have exceeded the technological promise, and the technology will continue to develop and like will continue to build things, but that doesn't necessarily mean that prices will ever recover to the previous highs that they reached.
So you think it's the top's in forever?
I think that the odds are higher than previous cycles, right? Every single cycle, and it's a bit of a truism, every single cycle that we pass, we reach greater levels of adoption, get more people into the space, and it begs the question of who is left. I think hidden in what happened in this last cycle, which was absolutely shocking, by the way, to most people that have been around, like no one I think ever would have expected to see this happen, right? Like it mentioned in Congress, Powell was meeting with the Coinbase CEO. All of these things seemed like you would be insane if you mentioned them 5 or 7 years ago. And so that has obfuscated the fact that we, from that high of euphoria, we will also probably reach, as in most previous cycles, the despondency of starting to ask, will crypto die because of regulation? Should alts exist, period, right? Are they just fundraising mechanisms and ways for the insiders to enrich themselves at the expenses of retail? These questions will eventually be asked. And I think once you start seeing those questions be asked and become the mantra of the market, I think you can start considering that the bear market is over. But until then, I think that there's too much hope that needs to be taken out of the market until we can get to that point where smart money that has dumped their bags starting in April is going to start rebuying. And at the same time, I would also say that people say that, you know, like there's not a lot of longs left. And then I've started responding to people by just sending them the CoinGecko webpage with the market cap of crypto, which is at like $1.3 trillion, right? That's $1.3 trillion of stale longs of people that may or may not capitulate. So the market is always long in crypto, you know?
At some point, I would love some capitulation because the slow grind downwards is just destroying for the soul, and I don't really like trading sideways stuff, so I just kind of like sit on my hands and play League of Legends. And capitulation, at least it's fun. At least like people get like upset on Twitter, and then you can like buy and sell shit, and it's fun. Whereas this like slow sideways down grind for 10 weeks in Bitcoin is just like, and like some people like this kind of market. It's like, not for me. It's so boring. Not for me. I'm going to stop reading the chart and looking at chat because I'm like so close to so close to bursting out laughing every few seconds. It's so
They're
good.
coping pretty hard.
It's so good. It's so good. I can't tell how like if people are being serious or if like there's some kind of like advanced satire happening in our chat. It's like the satirical participants that are contributing to the show.
I think
it might be 50-50, but you know what? I just got to stop looking at it because it's like distracting me. And I honestly, if I'm being totally honest, didn't really listen to your answer because I was reading chat.
I was listening. The answer was pretty depressing, but this linear monthly chart is one of the funniest things I've ever seen. Like, so bad. There's just, yeah, to your point about the $1 trillion CoinGecko stuff, I mean, there's not really $1 trillion in crypto, though, is there? Like, that's largely zombie coins down the further down the line you get. So I don't know. What do you think, like, the actual, liquid dollars are available to capitulate anyway?
Yeah, I mean, that's an interesting distinction. I think I would say that, to most people, I think they take that the value that's shown in their Blockfolio or Delta or Excel spreadsheet at face value. I don't think that they really dig into that. And it would be quite frightening if they did, because liquidity is so pathetic right now, right? Like, it's impossible to move large amounts around. And there's a lot of people who are just going to be like bag holders for life until a bull market comes again. I'm not really sure how much of it is liquid. I think that in terms of its intersection with price, the question would be how much of it is liquid versus how much demand there is to absorb that. And yeah, I think that a slow grind down is one of the scenarios, and it is a super painful one. And that's sort of like the thing that I've always thought about, the fact that in these sort of markets, the first shakeout comes with the chart that you're kind of looking at right now, where it's incredible volatility and some people capitulate as they suddenly realize that they aren't linear wealth, but they're truly log wealth. And the second comes from the boredom where there's nothing to do save for the 12 people on Twitter who, by the goodness of God, make good jokes and good memes. Yeah, exactly. No, for sure. You're definitely one of them, Cobie.
It's a lot easier to cope with the Ethereum chart when it's in log. Like, when you put it in linear, it just, I don't know how you deal with that,
And I think it's a bit of a joke, but everyone views charts as super important, right? Because it's a reflexive asset. We don't have valuation models. This cycle around, people say that their valuation models are conservative for DeFi, but Coinbase's volumes came down 90% probably from the highs. So how the fuck are you supposed to model that? And the same is true for all of these sort of models that base themselves off of revenues, right? Like Axie, somehow people took the like $37 million revenue figure that they put up, and they're now extrapolating into the future. And that goes kind of back to this idea of selling bounces, right? NFTs were this amazing short because they bounced in sympathy with Axie, even though Axie's success had nothing to do with, say, something like Sand or Decentraland doing well. It showed that there was interest, but it didn't show that they would also be sticky the way that Axie was. And everyone just kind of sat there complacently, and there was just this incredible opportunity to kind of scoop up all of this liquidity on the short side. And these things just immediately went down 30 to 50% in the following week. And I think that the thing that's kind of been saving me is this flip of reference, where instead of looking to buy dips, I'm just looking to take out the mallet on anything that bounces. That's how I source like my short ideas. If I see something that's up a lot, I take a look at it. I kind of gauge how much momentum it has, and then I start shorting it. It's worked pretty well,
Yeah, I mentioned on the show about Axie last Thursday at 25 or 26, and people got upset with me about it, and like it just immediately went down like 30%. It's just stuff like that goes parabolic, and the rest of their bags are wrecked. Like, what's natural for them to do, right? Like, they want to take profit where they can get it.
Yeah, and people get really hopeful, I think, that the market is back when they see some of the success, but it's kind of like a gambling addict that's not really looking, because the simple reality is, looking at this chart, if you were to buy this, you'd be running into like a burning building, right? Like, this isn't what you buy. And so, but because there are still pumps, and eventually there will be no pumps, but because there are still pumps on this roller coaster, people are still optimistic, and they sort of want to make it back because they want what they they're projecting what they want onto the market as opposed to what the market is willing to give for now. And while the volatility exists, they'll continue to think that there's a chance that it changes. But the reality is that insiders are showing up because most of these guys who have large positions are coming and seeing these bounces and looking for any liquidity to exit. Even more concerning is the fact that there's like these giant bear whales that feel comfortable enough to just short. And you saw this with the Bitfinex guy, right? At first, he started being comfortable shorting in the high 30s, and then it progressively got lower to the point where he was starting to short massive positions on Bitcoin at like 33,000 because he knew that every bounce was being smothered by people who were just dumping on any bounce. And it's the fucking roller coaster, you know. There's a reason that it happens because suddenly everyone has gone from risk loving to risk averse. And so if you want the market to bottom, like who's going to buy? You want someone else to buy, but there's no one there who's willing to deploy large amounts of capital and chase the price.
Cobie, I interrupted you. What were you going to say?
Yeah, I mean, you know, we like talk shit about Binance quite a lot, but Binance offers the ability to short some beautiful fucking shit. Like, you know, when Burry looked in the like mortgage bonds or whatever, and it was just dog shit, and he was like, well, you got to short the dog shit. That's like looking on Binance now. It's like you can look through Binance and you can find some stuff and you're just like, right, well, like if I'm bearish crypto generally, but like maybe I don't feel super comfortable shorting Bitcoin because you know I've been around since like 2011, 2012, whatever you've been around from, and you just feel like there's something wrong with it, or like it's not worth it, and maybe if you're wrong you'll feel like an idiot. All you have to do is go on Binance and find something where the fully diluted valuation is $8 billion and the seed round was in October 2020 and the VCs are up like 10,000x, and it doesn't matter if it kind of doesn't even matter if a bull market comes back because they're still selling no matter what. So like Binance has just got some absolute treats. Like when Definity launched, it was like one of the top 10 shorts in the history of money. It was like not just in crypto ever. It was like
Internet computer, you mean?
Internet computer. Yeah, sorry. Definity makes it sound too cool. When ICP launched, it was like, this is just one of the best shorts that you could ever take, like ever in the history of finance, because its FDV was so gigantic and the unlocks were just like plowing so much into the market. And there's a ton of coins that are like that now. And if you just find those emission schedules that look super terrible, have like massive amounts of bags getting unlocked soon from VCs who massively up on these positions, but probably down on other positions, especially like, you know, like late cycle clout chaser VCs where they're not actual like professionals. They just like came to try and like scam in crypto and bought a bunch of shit and got lucky. Like all their positions where they have liquidity and they have to like think about it, they're all down. So they're gonna need to recoup by dumping this shit.
Filecoin was another good one. I couldn't believe that.
There's a bunch
like,
of these.
went up. Filecoin went to $180. I don't know what their market cap is, but it was overvalued back here before it pumped, like before the bull market like super kicked off in altcoins. It was overvalued at $30, and it went to 200.
This is the sort of like dark part of this market, which is that, you know, Filecoin was pumped by like Chinese MLMs. Like you saw grandmas on the bus talking about Filecoin. Like, how does that happen? Well, obviously there's operators in this place that like need to generate liquidity. The ultimate end customer is retail during bull markets. And so if you believe in some of your investments and you are looking to de-risk without selling them, looking for the things that Cobie was talking about is dead on exactly what you would do, because the insiders need to, like with ICP specifically, right? Like there was this consulting firm called Arkham Intelligence that built an analytics dashboard that showed how much insiders in the foundation were distributing into exchanges. And so if the insiders are selling, Like, how can you not just help them out and then have them help you out on the backside? Because they're not going to dump all at once because they need to continue to distribute over time. So you might as well just front run them and sell beforehand. And that was an incredible short, right? There's a lot of these in the market because these sort of cliff vestings became so popular. And retail is sort of complacent. But if the insiders are selling, how could you be a buyer? Those guys know the project best, and they're dumping on you. They dump billions of dollars on your head. And that also kind of, again, dampens volatility in the long run until we reach an accumulation zone, because people have bought at such higher prices, right? That we have this overhang where everyone is underwater, and anytime it even comes remotely close to them breaking even, they immediately just unleash all of their tokens until you just see exactly this chart. Yeah. Where it just continues to die. And in the same way that during a bull market, you should be reticent to call a top, there's no reason to call a bottom of a bear market. It will get much, much worse than any of us expect, as it usually does. I think that we've been through a few cycles, all three of us, but I don't think even we are fully aware of exactly how dejected, boring, and sort of depressing the space will become. I think that the Twitter scammers and frauds will go away. Like, that's what happened towards the end of 2018 because it wasn't worth their while anymore.
I don't know if you can see these lines, but this is like ish where some of the break evens are for the people with vested tokens on ICP. So
wow.
Yeah, like I think this was some kind of investor strategic lockup thing at $4.
There was a 25-cent, I think, ICO round.
Is that minus 90% and then another minus 90%? Because I love that if it is. It's basically minus 90, minus 90.
Yep, that's 80% on trade number 1. And then it's another 90% on trade number 2. So it's down 90. Well, if you consider like the top tick on Coinbase, it's never spent a moment above its opening trade. It's down 95%. And to reach break even for the people that are invested in this from the beginning, it's 2 more 90% trips. So it's like full Zcash capacity.
And then you think about the people who bought, and then you ask like how many 100x's do they need? They need like a 10x, right? Currently to get to break even, which is asking a lot.
Do you think that's how it goes? Do you think the top ticker bought and still holds it? Because I think the worst thing about bear markets is this like constant recycling of someone selling someone else who's going to sell a bit lower. Like the top ticker sold for like minus 30% to someone else who's going to sell for minus 30% in this sort of negative feedback loop of dumping. If the top ticker is still holding, like if you're the dude who bought the open on Internet Computer like $1,000, whatever that price is, on Coinbase, please get in touch. We'd love to bring you on the show, and we'd like to talk to you about your long-term investing thesis and what other trades you're thinking about making in the near future.
Yeah, it was about $600 that it traded at. I'll take a look to see like what it actually, like if you can actually identify some of these trades, because I think that's what's interesting. Is like how long did it spend there? Was it a moment?
No, I think you're right though. That like obviously some people just sold at a loss, so it's the full loss isn't necessarily harvested by anyone except truly exceptional individuals. But at the same time, like this one's near and dear to my heart because I sold a shit ton of it at like between $300 to $400. That's what derivatives do in this market, right? They make price discovery match happen much more quickly. The funny story on this was that I actually wasn't naked shorting it. I thought that I actually had spot, that I had bought OTC, because this was one of the great trades during the bull market, buy OTC and then flip it on Coinbase when it lists to retail. The problem was that suddenly what I thought was unlocked tokens were actually got vested for 12 months and I still haven't received delivery, right? Because that's a bit of an ICP. So I was actually naked short, and now it's actually been fully returned to sender because I OTC'd it at 13 and 40. And then it's back to back to where it started. But there was a lot of value extracted by some people who were fortunate to short sell or hedge, and there was a lot of value extracted by insiders. That few $1 billion must have come out of somewhere. People say that markets are a transfer of value to the patient. I think crypto, especially within altcoin land, is usually a transfer of money from outsiders to insiders.
This looks a lot like the old KuCoin listings. Y'all remember those? Like where the quote market maker would basically push them up and enable distribution early in the listing, and then massive volume basically just feeds into that for positioning to short it, like you just said, because you just do a OTC version of it if you're going to go short that market. Yeah, that's like there were hours where someone could get in above $400. So that's pretty brutal.
I feel like it's my duty as a host of a show called Up Only TV to provide some counter argument / recite some events that have happened that people may describe as bullish, or at least not impending doom-ish. So I'm going to turn my lights back to a different color.
Cobie, maybe I should just turn the chart off so that you can actually do this with a straight face.
Look, everything's going to be okay. We're green. So you need to put the euthanasia coaster on top of to make it legit. So there's a bunch of stuff happening in the space that I'd love to hear your opinion on, given that you're saying that everyone's going to be poor and a bag holder for life. There's like if you look at the Ethereum chart in mid 2017, it dumped from 400 to 100, I think, from memory, and like fully recovered and bull cycled towards the end of the year, topped out at like 1.3k or something. You see a ton of activity from Visa and MasterCard doing like stablecoin rail shit. You have a bunch of VCs raising massive funds. You have huge fundraisers happening now. FTX just raised basically $1 billion. Like A16Z just did a multi-billion-dollar fund. Like the crypto VCs are buying like multi-year like vested positions. Some of them buying at market, mostly after the SUSHI swap drama. I've seen a couple of like VC deals go through where the VC's buying at market price but locked for several years, which I think is actually pretty good. Like a pretty good sign for the industry. Like there is a little bit of maturity, and VC's been like, we want a big position, but we also want to contribute and be like locked in. We're not going to like try and swindle a below market price. You have the, like, I now think it's relatively unlikely, but you have the 2013 double bubble like fractal pattern. You have no signs that a like devaluation of major currencies is going to stop anytime soon. Like, I'm providing you a bunch of things that you would potentially look at as bullish. How do you feel about those things? Do you think they're irrelevant? Do you think it's like doesn't matter in face of the massive selling pressure?
Yeah, so I mean, to start, I think there's a massive congratulations that is owed to people who hold all the way through cycles. Ethereum went to $82. People capitulated there, all the way from 1,400 and something. And I think it's incredible that people held all the way through with conviction and then held it all the way up to $4,400. I think crypto is incredibly resilient because people believe in it. That's been diluted somewhat during bull markets because a lot of people who come in don't really understand or believe the things that other people do, and they're in it for the quick buck. And those people will be washed away during bear cycles. I think bear cycles are like prescribed burning, in that a lot of the fraud and sort of like weak hands get shaken out and coins get back distributed into sort of people who fundamentally believe and understand the space and the promise that it has. That said, each of these sort of bullish events is part of the greater institutionalization of the space and acceptance of the space, but we've already priced that into a certain extent, right? We reached, I think, about $2.8 trillion market cap. So these sort of positive outcomes, price had attenuated itself to them. And the question is, when you see something like MasterCard adopting or being friendlier towards Bitcoin or crypto in general, and PayPal sort of increasing limits or anything else that's on the bullish docket, is not necessarily like, is this going to make price go up? But like, to what extent does this fulfill the expectations that the market has already created through price, right? So for instance, these events so far have clearly not been enough. They have not exceeded expectations far enough to cause a reversal in the market. And I think sometimes markets really don't care about news, and you're seeing this now, right? Like, I think CMS was on Twitter today, and he was kind of almost sounded exasperated because he's like, how many billions need to be raised for this market to go up? And I think that was, it alluded to a certain thing, which is that like the market right now just doesn't care because it's having an unwinding cycle that usually can only resolve itself in the form of like volatility collapsing and an accumulation base where high conviction holders come in and buy for the long run and will not be shaken out. In terms of VCs, I've heard sort of over the past few months, a lot of people say, look how much money is coming in from A16Z, from all of these funds that have raised. And you heard about the fund flows in June and July. It seems like they almost might be slowing into August because people went in too hot and heavy into this initial dip. And just in general, I don't think VCs really like even claim to be very good market timers. I think Andrew King had this point where he said, the people who are coming in now from traditional VC kind of misunderstood crypto and came late to the party. And for the same reasons that they misunderstood it when it was actually time to buy, they are now buying when it's time to wait. For a capital allocator, I think your job is not really to try to hope that the market will reverse. It is to conserve capital for those opportunities. If you're a strong conviction bull, you're looking to preserve capital so that you're around to buy what most likely will be incredible discounts below fair value. Because if we can go too high in terms of euphoria, we can reach too low in terms of depression. And that's really when you want to have money and confidence. If you get destroyed by this market right now and the boredom and the bleed, you lose conviction just because price is like a nightmare to you over and over. And by the time it comes time to buy, you've taken yourself out of the game, not just capital-wise, but also emotionally.
I remember in 2017, people... I was excited about crypto. That was my first cycle, like being invested. People would come to me. They're like, "Oh, I need to buy this. This thing just went crazy. It's $4,000 now." And I would usually just say, "Wait till there's a 40 or 50% drop before you buy." Naturally enough, like most people didn't actually listen to me until it went to 20K, and I was like, "I don't know." wait till it goes down 50% before you buy it. And then they finally bought at 10K. And it reminds me of what you just said there, Light, that it's like by that time they've then allocated their capital too early, right? Because they're like halfway or a third of the way into like the long bear, and they're buying the dip. And I felt that in my personal life again this time, where people were like talking about wanting to buy the dip off 60K or wherever we topped. And now it makes me wonder, like, how long are they going to have to stay resilient essentially to break even? Because it seems like as much as we were promised, a little less volatility, institutions will make these dips more tolerable, a little more like the regular market. We didn't actually see any of that. Like we had a 40% down day in one candle. And it makes me think that people who are buying the dips, like if we have another severe push down, which from a technical standpoint at least looks like the most likely scenario, it could take years of repair for those folks to break even. Do you think that, how would you encourage those people to stick with it, right? They just heard like, I don't know how long, 48 minutes of nothing but bearishness. So if people are getting allocated now, maybe they allocated too early, like you said, some funds were doing, or I know some people were doing for sure. What would you advocate for them to like fix it, right? Do you let go? Do you and like come back more slowly? Do you just sit there? What's your like thoughts for how you would tell like a regular person to play this market?
I think it depends on how much risk you're willing to take. And so you would I would recommend that they do the mental exercise of imagining that they could sell all of their bags at the current price and then ask themselves what percent, if 100 fine, if less than that fine, of them they would rebuy, and how much capital they would want to hold back. As to the sort of more soft skill question, I think Cobie's answer from the previous time we chatted is the one that kind of stuck with me. I think that was actually the best thing that came out of that whole podcast, which was that you have to separate price and the industry. The industry is sort of this incredible thing that will always surprise you to the upside in ways that you could have never imagined when times look the worst. And you just need to stick with it and focus on like the long-term idea of what this space is and ignore the price. For every investor, the key moment of opportunity is the greatest deviation between price and fundamental value. And if you are truly high conviction on this space, what is happening currently should give you great enthusiasm for the opportunities that you're about to set up for yourself if you get to the point where you can survive. We talked about this last time, I think, where, you know, wealth is created during the bear market and then holding your longs that you've accumulated with conviction into the bull market, not by FOMOing in during the parabola. If you're a trader, maybe you get away with it. Most people don't. Some of the best in the world haven't. But this is an incredible opportunity for you. A bear market should not be something that scares you. It should be something that you objectively assess and view as an opportunity to control your emotions and strengthen your thesis.
Yeah, I think that's right. Like a lot of people come into the cycle late, yeah, and they have seen people get rich, and they see people get rich alongside them almost, but they're not positioned properly for the bull market. They're, you know, buying all-time high breakouts or something, and they're hoping to make life-changing money in that one cycle, when really the people who did the best on this cycle were the people that were positioning in late 2018, early mid 2019,
or even like 2020. I mean, the break from 10K did quite well.
Yeah, but I think a lot of those people, I think a lot of people that were in 2020 and like did really, really well were like professional traders mostly. I think a lot of the post 2017 into January 2018 bubble, like people who like stuck in the market, did their research on like the projects they thought were going to be relevant in the future, and positioned well into their investments when they reached prices that they found like tolerable to buy at, did really well. I'm thinking like that your people like I forgot his name, sorry mate, the guy that runs Defiance,
Arthur.
Oh my god, Arthur. Sorry, Arthur. He bought a Lamborghini the other day. How can I forget your name? He bought a bunch of stuff at the like depths of a bear market, or very close to the depths of a bear market, and then just like became a billionaire because like the projects he picked like were pretty good.
Yeah, I told that guy to walk on when he pitched me a DeFi fund. I think back when he was getting started. I think most of us have also just started during the later stages of a bull market, statistically. Like I came in May 2017. It's just the way that things work, and people get brought into the space, and some survive and some don't. I would say that you should be prepared, especially in alts, for the possibility at least that there's another 50 to 80% drawdown on most of these names. That's definitely in the cards.
I think to your point, even
95%. I think the most important thing on alts, sorry Ledger to interrupt, I think the most important thing on alts is to evaluate if the thing you're holding actually makes any sense. Like, did you just get bought into some narrative that was like piggybacked on the top of a different narrative that was successful in a bull market because of a tertiary narrative, and you don't really understand why the thing that you own is important, but maybe you understand some of the words, like, you know, maybe you know what MEV is, or you've heard some smart people say what MEV is, and now you own a bag which is tangentially related to MEV, but you're not really totally sure how, and like maybe you're just hoping. Maybe you're just hoping that like in some way you've heard a combination of the a sequence of the right words, and it's gonna, and you like throwing like you've got a lottery ticket that's gonna come good. But if you genuinely don't understand why that thing is, like what that thing is, or why it makes sense, then you need to properly evaluate these things, because like multi-cycle survival for altcoins is statistically unlikely. Like Ethereum did it, has survived multiple cycles now, and like outperformed multiple cycles. In bull markets, Ethereum does really well. In bear markets, it does way worse than Bitcoin. And there's a couple of others, but that's about it. If you go back to 2017 and look at all the big altcoins from 2017 that were very popular, a lot of them didn't even break USD all-time highs, or they maybe just made it there in this market. So you managed to basically break even if you bought the top. And like the majority of these things, they're just a meme. Like they're just something that someone tacked onto a narrative in a hope to raise some funds, and a hope to get rich off the back of froth. Whereas there's also a bunch of things in the market today that are genuine products, and if crypto is the future and another bull market's around the corner, they will survive, but it is a fraction of a single-digit percentage that are going to make it, and the chance that you're holding them is probably quite low if you don't know what the fuck the bags that you own do.
Yeah, I think that's where I was going as well. It's like, to your point about people that might not have made it if they got in 2020, is there's this onboarding period where you figure out like what are the things to own for the long term anyway. Like you get in and, you know, people talk about ADA and XRP and stuff. Lo and behold, they've actually performed pretty freaking well during the speculative part of the cycle. But like for people like Arthur to get conviction on what they won with, for him, like a massive run up in synthetics, or some people that, you know, got in on some of the other DeFi stuff when it ran hot, that if you're brand new, like it's probably not even on the exchanges where you're trying to onboard your fiat. And so therefore, like getting that upside in those early months is going to be difficult. Early months of your crypto journey, late months of the bull cycle. My question now is, let's use an example, right? There's this debate going on with SUSHI at the moment, and ARCA, Jeff Dorman is talking about SUSHI at $7 as an extreme value, and other venture investors are wanting to do this strategic sale that's based on an average price of SUSHI over time. And you look at SUSHI, it ran from 60 cents, but it's also got a lot of volume. It's, you know, widely used DEX. It's got token value accrual, all the things that you would talk about if you're talking about DeFi, and you know, like what makes sense from a token perspective. So is this the type of thing that's subject to this 60, 90% drawdown? Is it a value, as Jeff Dorman would say? Light, Cobie, yeah, people with more experience. I mean, how do you approach these subjects?
I appreciate you shilling my bags. And by that I mean I'm short SUSHI, right? And so I think like there's not a lot of Hindus in the United States, and there's not a lot of Christians in India. And what I mean by that is that people tend to like alts that line up with their worldviews, right? There's a lot of tribalism. Cardano is liked by people who like appeal to authority and professorial types. XRP is liked by people who are boomers, who like the banking system, but want to make a little bit of innovation. SUSHI is liked by people who like relative value comps and think that they are buying a good deal. That is favorable in terms of traditional finance valuation metrics, of which I think Dorman's thesis on this kind of lines up. I think that his belief that sixes are an extreme price is due to anchoring or recency bias, right? SUSHI was being bought at 60 cents less than a year ago. And so I think that is much more extreme than the fact that it's crashed from 20 or wherever it was during a retail-led euphoria. SUSHI's sort of fundamental issue in my mind is that it has sort of no compelling narrative the way that Uniswap does, nor does it potentially have the same level of technological talent that is necessary for an innovative space. I think you want to buy winners. You don't want to buy things that kind of throw 12 things at the wall and hope one sticks. It doesn't have as focused of a narrative. It doesn't have as clear of a competitive advantage versus each of the individual competitors that exceed in their specific field. And so I worry about Sushi both from a narrative perspective and from its ability to innovate truly, as opposed to mimic, right? It was started as a vampire attack on Uniswap. It's been hard to shake that sort of role in the market. It had this incredible sort of rally from 60 cents to $20 because it was community led, and people felt like it was an opportunity for it to catch up to other DeFi projects. So far, it seems to me that what they've delivered has been lackluster, and the sort of revenue to protocol metrics are continuing to collapse, which means that the models which justify these valuations will have to continue to be readjusted.
Yeah,
and
that reflexivity definitely works both ways.
For sure, especially on DeFi. The whole thing is sort of self-referential, where the TVL depends on certain tokens being valuable so that you can generate yield. That collapses, which means that revenues collapse. Trading has collapsed on these platforms because retail is dead. All of this kind of means that your models should probably be projecting negative growth as opposed to positive growth in these protocols, at least for the next few months, if you're being reasonable.
I actually disagree with you about Sushi versus Uni, though. And I think part of it is regulatory. Like,
didn't you sell synthetics at 30 cents?
I don't know. I don't think it was 30 cents, but
all right, just to frame that, just to frame it. Like called the macro top live while wasted, and Ledger sold synthetics at 30 cents. But here's Ledger's opinion. Here's Ledger's opinion on the sushi. So she swapped debate.
Compare some clout later, but the reason that I personally do like Sushi is that I think that they operate in a regulatory gray area where there's more potential for success in crypto, whereas Uniswap is in the United States, where like performing the governance mechanisms that actually enable token value accrual in any capacity are going to be very difficult paths for them to take. And there's no other real value in terms of how you deliver fees and whatnot to token holders in Uni. And also the governance is a joke, as you know, Cobie has demonstrated on behalf of everyone. Whereas Sushi itself, like, you know, governance may have its issues, but I think overall it's able to be governed, able to adopt. And then I think what makes it original is not necessarily that they have like gigabrains that reinvent something, the way like maybe Uni v3 or Curve v2, like some of the fancy stuff. But they've shown a really exceptional ability to execute as the underdog. And if there's one thing that I think they've done well, it's become quite horizontal, where yes, they have Uniswap style functionality, and yes, they have Aave style functionality. And they pull like several of these DeFi mechanisms across a horizontal basis to create an all-in-one suite, and have also been able to put a lot of liquidity and community effort, as you noted there, Light, on the way up, that'll help support it and give it the ability to survive on the way down. I think it'll probably be a top buy of mine whenever the time is right. However, I do like just looking at the chart when something goes from 60 cents to $20. For that chart to repair itself, it may require more down than to $7. So I could imagine it going to $2 or $3, but I do think Sushi will be an extreme value at some point and probably has staying power, significant staying power in the DeFi landscape.
Yeah, I agree with you.
You know, I don't want to get into the Uni versus Sushi debate and like which one's better, and is community led better than A16Z, like deciding what happens, or A16Z student delegates deciding what happens, or whatever they're doing now. But the original question that got us onto this topic was, is something that is valuable, whether it's Sushi or something else, still exposed to, you know, an 80% drawdown? And I think what a lot of people probably need to realize is it won't really matter too much if the thing is valuable or not. Like, if the thing is like a blue chip, or if it is, you know, like complete shit, because they'll all go down. You know, they'll all have a potential 85-90% downside left in them. what matters is whether they can recover or not, and then things that like are legitimate projects or blue chips or whatever, they have much more chance of recovering. But like on the downside, it doesn't matter too much whether it's legit or not. It just depends if it can ever come back.
Yeah, it's like,
you know,
what to buy in the recovery, not so much to say like, you know, hold it all the way down.
Yeah, because like Bitcoin's
Sorry,
like the biggest blue chip, right? And Ethereum as well, and they've both suffered like minus 90% drawdowns in their life. So in their lifetimes. So I don't think it's about. I think everything, no matter how like blue chip, I fucking hate that term, but like no matter how much of a legit project it is, in a bear market, people are just dumping this shit and like they're going, oh, I can't believe I have to tell my wife I lost like $100,000 on SUSHI swap. Like, what's she gonna? She told me that these crypto coins were bad when that Dogecoin millionaire was never selling. She told me to sell, and she was right. And now I've got to sell SUSHI swap. I've got to tell her where the kids' college fund went. That's what they're thinking. They're not thinking like, is this going to be a blue chip in the next cycle? So everything has got that massive potential downside in it, no matter how legitimate the project is. Generally, the smaller the market cap, the more it's going to fluctuate.
Yeah, I think avoiding stuff that's going to go to zero is a pretty big key at the moment. Like, or avoiding stuff that's going to go down 95%. Like Bitcoin probably isn't going to go down 95%. Like if Bitcoin, where buyers really come in are, let's say Bitcoin's sub 20K again, it goes to 14K, 12K. Look at some like macro supports, weekly highs of, 2019. There's going to be a lot of buyers no matter what at that level. So what's the price from now to there on Bitcoin? What's it? 60% as like super doom scenario from here. Whereas some of these alts, like 95%, like you noted already, 95% trips for ICP, your relative downside is significantly higher there.
As is the question of whether it comes back, right? Because if you're a long-term holder, the ultimate valuation in which you can exit, it matters. Contagion is a real thing where people just sell indiscriminately, especially when they're emotional. There's also a very perverse pressure on things that are liquid, because there's tens of thousands of tokens, some that none of us have ever heard of, that just there is no liquidity. So when you need to de-risk, you start actually hitting high quality names because they're the ones that have sustainable liquidity. I would say that when you're trying to evaluate this, I think that trying to be a judge of character, I've learned this from VCs. I think this is one thing that they have right. You don't invest really in ideas in a nascent space. You invest in people. And there are certain people that rain or shine will show up and put in the time to build their vision. And there are people who are looking for a payday. It's a very important skill in the space to try to determine which founders are of which type, and make sure that if you're looking to go to the mat on the assets that you are invested in, that you have founders that are truly compelled to carry out their vision the way that Vitalik is, the way that some other alt founders are, versus some founders that will sort of, won't name by name, but who view creating an altcoin as a way to generate capital.
Go on, name a name.
Everyone kind of knows
do we
a
want
variety
to name
of them.
A name? Chat, give us a yes or no. If you want him to name a name, give us a yes.
Dan Larimer? Didn't he?
I want a more controversial name than that. I wanted something that's like, ooh, can't believe he said that live.
Right. I mean, I think that of the large caps, I think Cardano and Ripple kind of fit those.
Yeah, but everyone knows that already. Come on, something controversial.
Yeah, I can't think of one off the top of my head, but I think that you'll be able to see anyone who's working on like 3 or 4 projects at once that have all raised capital probably fits this mold as a general heuristic.
When I was talking earlier about, where to go from here, I do want to, as Prometheus of the plebs, I've been through a cycle where like monetarily I didn't really gain from it. Like I had more money in the bear market than I had in the 2017 bull market at times, but like it took me a while to get back above all-time highs. I never realized cash back to my bank account through that entire cycle. In fact, this cycle is the first time I'm ever doing that because I wanted to stay involved, like stay committed to the market so that I didn't miss those opportunities as they started to exist again. So I'd like to talk about like, how can people prepare for when there is a new opportunity? Like, how can they survive? How can they find the right stuff? Like, how can they find some freaking hope in all of this drama that and depression that y'all are spilling out? And I'll start with what I've told some people already. So one thing I've mentioned is that, like, you know, Bitcoin, Ethereum, if they have this kind of 50, 60, 70% downside remaining as potential, I started with what you said earlier, like what's your capacity for drawdown and what's your horizon? If you have a 10-year horizon and you're willing to ride this to zero, then sure, you don't have to sell. You can just kind of buy more as of the majors as, you know, they present themselves. What I told for people that didn't want to tolerate 100% loss was basically, well, you can capitulate this range and then dollar cost average from there instead, or like capitulate 50% or 70% or something like that. And then just like play it out over weeks and just buy these big dumps whenever you get them, and like consider yourself lowering your average, or if it goes up, you're increasing your average. But if it continues to go down, you're lowering your average overall as you like get reassociated with the market, and then seek opportunities like new categories or like existing categories that have a resurgence from the bottom. Look for those opportunities as you learn and educate yourself. Do you think that's a good starting point, or like where would you tell people to go for like not only to survive until a new cycle, but also to potentially thrive?
Yeah, I think that's dead on. I think that if you aren't comfortable with waking up tomorrow and having crypto assets be at zero or close to zero from current prices, then you probably are over allocated. I think that a lot of like the people who got this whole industry started and really believed in it were fully ready and willing to believe that it could go to zero,
and still are, even though they're like thousands and thousands of % in profit.
I remember back in at the end of 2018, there was sort of a huge macro unraveling in terms of like concerns over the Fed, and then we finally lost 6K, and there were sort of these bidders of last resort that showed up on Bitcoin, especially at 3,000, and those guys have been around the block a few times, and they were just willing to go to the mat. You need to find assets that you're willing to do that with, and deploy the amount of capital that you believe you're willing to fully lose in case your long-term thesis is incorrect. The moment of maximum danger that happened a couple months ago was when people just didn't believe that assets could go down, right? Like bulls thought that 40K would never be lost. Now it's that 30K will never be lost. Now it shifts down. The goalposts keep getting moved down, and you end up being a frog in like a boiling pot of water eventually, without having realized that you turn from a trader to an investor. Don't let that happen to you. Don't let timeframes shift as your thesis changes. Take the amount of risk that you feel comfortable with and have a plan for the future of where you want to allocate more capital. And that's financial capital, but there's also a great way to build financial capital, which is to invest your own human capital into the space. And there's like a huge amount of opportunities to work in projects and generate value for yourself there and build capital for yourself. If you have a small bankroll for trading, I would highly recommend that you stop punting around on alts on leverage, and that you look to invest in yourself as a participant in the space, because it's not going anywhere. But if you're trading $4,000 on leverage, there is no way that you're going to make it, right? Unless you are literally a once in a million prodigy or get incredibly lucky. So invest in yourself, start working and delivering value into the ecosystem, because gambling on leverage is not delivering economic value, and the market will reward you appropriately.
You know what I found amazing is people that already knew that lesson of like, don't trade your whole stack on leverage. Like, I feel like BlockFi, as an example, really lured in a lot of people, and including people with a lot of money, to this point of like what you said, like about markets can't go down, where they're like, okay, well, my liquidation is like below the prior all-time high or something like that. And all of a sudden, now they're sweating, and they've got like all their freaking Bitcoin they've worked for years, maybe multiple cycles, and it's sitting there leveraged to the tune of maybe 1.3, 1.5x, and now they're sweating it, and they're like at risk at this very moment, because they don't have the collateral to shore up that loan. And I think that's another important component, is to realize that any leverage is still leverage, right? Like, if you are borrowing, then you are leveraged. And I don't know. I think that trapped a lot of people. Like, I feel like people just continued to lever up the whole way up above the all-time high.
Yeah, I think it's most people who trade derivatives and borrow money tend to not make money in the long run. I've had enormous drawdowns personally since starting to trade in 2017. There's been times where I've come close to being taken out of the game. I was still young, and so I could have come back and put more capital in, but I was taking a lot more risk when I was younger. And there's also times where I've gotten lucky, right? I think I was 2x levered my net worth on the way down in 2018 before Papa Xi decided to save us, you know? And if that short squeeze hadn't happened, there's a very real likelihood that there's at least some non-zero chance that I would have capitulated near a bottom of some sort. And I think Dan probably said this. I can't remember who it was, but you never put yourself in a position where you will be a forced seller. The space is so volatile. It exposes weaknesses, both on the upside for people who get liquidated on shorts right at the top, and for people at the bottom who sell sometimes just to cover bills during the boredom part. Don't put yourself in that position. The space has 100x returns in the span of a year. Sometimes you don't need to be all in. You need to manage risk because there's so much opportunity that can be captured in the space.
Yeah, I think it comes back to like previous of these episodes where we've chatted about, like, the most important thing is just surviving cycle to cycle. Like, you don't have to top tick everything, you don't have to bottom tick everything. We're like existing in a space that has done multiple like 20x in a year runs. It's also done multiple like 75% drawdowns in a single candle. Like we're in a space where over 10 years you've had the chance to, like, I don't even know the numbers, like 1,000,000% your position, and the only people that haven't been able to take advantage of that are the people that have wiped themselves out by getting greedy, trying to catch up on returns that they think they should have had if they held all their Bitcoin, and like just surviving and taking like a longer term view of not just the market but your own personal net worth and like your own financial goals. I guess taking a longer term view of that rather than wanting everything in the next 3 months has been the trait that is most predictive, I guess, of potential of success of achieving those goals, I think.
Yeah, because the space will give you the opportunity to get rich extraordinarily quickly if you let it. I think there's that quote by Ed Seykota, right? Like, a lot of people come to this space and they think that they want to make money, but really what they want to do is get rich quickly or gamble. The other one that people always succumb to is they want to be right. And, you know, there's a lot of people who say, hey, this guy's wrong, or hey, this guy called it perfectly. None of that shit matters to the end result because we're all here to invest in assets that we believe in. I've been wrong so many times, but I've managed to make money from the space because I don't wake up and decide that I want to be right. I just want to invest in ways that are profitable and manage my risk accordingly. I think people like idolize people in this community for like being right or making certain calls or drawing lines on charts or whatever the fuck. But if you look at the people who have really made it, they just own their bad calls and just move on and learn from it.
Yeah, but do you ever think about top ticking your net worth and thinking about what could have been? Because if I think about all my mistakes, and if I just held the Bitcoin, or if I actually think about the most Bitcoin I ever had, and then I'm like, yeah, that's quite a lot of money. That's quite a lot. If I'd done like similar trades with it as well, like, you know, I'd top ticked my Bitcoin and doing the same like rotations, that's quite a lot of money. It's quite significantly different to my current net worth, which is still fine for me. I'm still alright. Like I'm, you know,
yeah,
I did alright. But like the amount of mistakes I've made, I think, have probably reduced it by like 75 to like 80%. And I think the hardest thing for me to learn, and maybe you can talk about this. You've been doing this like for 4 or 5 years now. Like the hardest thing for me to learn was for not to let a single error or a single mistake be sort of the the mother or the father or the genesis or like the reason that like 10 other mistakes were spawned, in that when I was newer to the space and I didn't really know what I'm doing. Honestly, I still don't really know what I'm doing. I never invested in learning. But when I was new to the space and I would make a mistake, that mistake would be the reason for 10 new mistakes, because I was unable to take a step back and go, what mistake have I made? Why have I made it? How can I now position best based on my reality, rather than what I did, which was like, fuck, I've made a mistake. Oh shit, like I would have had like X number of dollars if I hadn't made that mistake. How's the quickest way to get X number of dollars back so that I can undo the mistake I've just made? Well, maybe I need to now take this position, because if I'd taken, and then I just like, you create a bunch of new mistakes, and then you fucked it even further, and it's like sort of this like weird negative feedback loop until you just go, right, I'm gonna stop, I'm gonna go binge some ketamine or something. So I think that cycle's quite hard to break, and especially for people that are newer to it. No, I don't give a shit. I made another mistake. Fuck it. Who cares? It's
I
Tuesday.
think from the bottom of my heart, I feel that because I've been in that situation when I was first starting out, right? There were times in the 2018 range above 6K where I got chopped to absolute shreds because I kept compounding one mistake into another. You have like a certain tilt that comes from getting results or outcomes that are not the ones that you want. And, there was a point during the range in 2018 where if you had just faded me, you would have made infinite money, right? Because I shorted a few times towards the bottom of 6K because I was like, here it goes. And then I'd like long, like closer to the top. There was literally, I flipped like 5 times in the span of a month where I pinged off like the absolute nut low and nut high in the wrong way. I think for this space, you just have to kind of learn by getting burned. As long as you have the introspective ability to be honest with yourself and focus on the process rather than the outcomes. And I think my advice to everyone who comes to me and has taken like a real bad beating in markets is that I found that no matter how aware you are of the fact that you're emotional or not fully rational and not thinking about the long term, there's nothing that can throw you out of the grips of the market than taking a break and resetting. And so now, whenever I'm in a bad spot, I will force myself away from trading. It becomes a very satisfying kind of positive experience to know that you are avoiding making the mistakes that hurt you so bad and lock you into this downward spiral of death. That almost everyone.
Extraordinarily difficult thing to do, to walk.
Yeah,
away.
I don't think you can kick yourself out of it by trading. I think that you need to force yourself, and eventually, you start taking pride in doing it once you've done it once. The other thing you can do is kind of sort of focus on the positive. So if you're down on a position, take pride in not rage closing it in one order, but close it the way that you would a winner. And take satisfaction from the fact that you're improving the process and learning. And hopefully next time, and there's no guarantee, next time you might fuck it up just as bad or worse, but hopefully you're trying to improve yourself. Like Cobie, you guys both have been around in the space. You guys are some of the more successful people in the space, regardless of mistakes. Everyone makes mistakes in this market because it's so new and so difficult. It's a question of making less mistakes over the long run and making less mistakes than your peers.
So I think also handling those mistakes better. Like you see those statistics, right? And it's like 85% of traders lose money or something, and then you got a question like, all right, why? Like, why is that the case? And then you look, and like most of those traders quit within 1 year or within 9 months or whatever the statistic is. And then you just got to think about the common mistakes people make that could lead them to quitting, and most of them end up with they do a single trade that like loses so much of their balance that they just think, fuck it, it's not worth it. I've lost 50% in a single trade or whatever. And like building a system that you are comfortable and confident in, like have personal conviction in, like that's why you can't trade on other people's tweets, because you don't have conviction in the idea, you don't understand the thesis behind the idea, you don't know when it's invalid, and you can't get live updates from this fucking person. But having a system that you believe in, and in a way where if you're wrong, you don't lose your entire entire net worth and you can manage those mistakes well, you don't need to be right more than you don't even need to be right 50% of the time to make money. You can be right 30% of the time and still be profitable, as long as you're managing the downside of the times you are wrong,
particularly in a high volatile market like crypto.
Yeah, it's like there have been periods of time where I've been like making trades and closing them so fucking fast because I can't do anything right, but I still end up profitable on that month or that week or that period of time, because when I'm right, I let it run and I look after the trade and I make sure that I maximize its potential. And when I'm wrong, I make sure I fucking shoot it in the head as fast as possible and I pretend it never happened. I go, I don't care about that.
Dude, that's a learned behavior. That's extremely difficult to come to terms with when you're trading, is to identify that you were wrong and then change your mind about it. And I think there's a couple of things that people that have not been through as many cycles can do. One is your gut is a survival instinct that is there for a reason. And number two is your plan is created so that it can think for you when you don't have the capacity to think for yourself. And if you follow your plan and you follow your gut, you'll probably do a pretty good job of avoiding some of that massive downside. And then just have this absolute fear of total drawdown or having these massive losses. Be willing to be small wrong so that you're not big wrong, because that's going to probably save you a great deal. Minish Man said something that I just want to quote outright because it's great in the chat. Shout out Minish Man. He said, I think the way to not focus on the money I could potentially have had is to realize that you cannot have success without failure. It is not possible for you to enjoy the pleasure of having traded well and made money without having traded badly and lost money. If you couldn't fail at trading, you'd very quickly get bored with it and need a new mental stimulation. Thanks to the mistakes, trading can still stimulate.
And thank you for tuning in to our new self-help channel hosted by Ledger Status.
Well,
yeah.
I mean, dude, trading is psychology. When you were talking, both y'all were talking, I can think of half a dozen instances in my trading life. A couple of them ended up being relatively non-consequential, but they were high conviction or high, I don't know what you call them, trading depression, right? Where you feel like you're peak wrong. And you remember these moments and they can shape your future decision making. And they can also shape the multiples of your net worth. Cobie, you mentioned some that would have impacted you. I can think of some where if I had followed a plan or followed my gut, like I was talking about, my today's net worth would be 4 or 5 times more than it otherwise would be. Because if you take a 50% drawdown when you should have, if you followed your plan, maybe you take a 200 or 300% upturn. That's a massive difference in your overall trading portfolio. And I can think of several where that kind of macro decision making and then an inability to turn your behavior costs a lot of money. And if you have the ability to change that your psychology as the market presents that you're wrong, that's a superpower, and that's why you're incredibly wealthy, Cobie, because you were able to shrug that off as if it was no big deal to call yourself wrong.
Yeah, it's you get used to it. You get used to it when it happens all the time. I think the other thing that's difficult is sticking to the plan when you've made a plan, because when you make a plan, you're thinking clearly, right? You got you're not caught up in the froth. Elon Musk's not going on TV to talk about your bags. You're just doing maths on an Excel spreadsheet or something. You're this is the plan, here are the things I'm thinking of, and this is what I'm going to do. And then when it comes down to executing it, you're I can't sell now. Previous me was an idiot. New me has all this new information, is going to infinity, and being able to execute on a thing that you wanted to do is even more difficult. Like you said earlier in the episode that you're a very emotional trader. I'd love to get some elaboration or some expansion on what you mean by that, and if it's any of the things we're talking about.
Yeah, I think there's a whole host of things that we've kind of walked through that are included, but it mostly has to do with the fact that you kind of have type 1 and type 2 thinking, right? And when you build experience in markets over years and years, and time is the only thing, time and getting burned are the only things that I think teach people. you end up having a certain intuition. You should trust that intuition. Sometimes it's wrong. And being able to be self-aware and introspect yourself during the process of trading, and that aspect of mental game is incredibly important. I kind of struggled a lot with it in poker and finally sort of solidified it enough. There's one of the guys from Blue Crest who kind of sometimes says he gets into trades that are macro discretionary and then will immediately pile out of it because it just doesn't feel right. Some people feel bad about paying trading fees or taking a small loss. You have to realize as a human that you're biased against these things, and to overcome them is an incredible success and part of the development that you have as a participant in the market. I have to hop off just in a brief moment because Asia's about to start, and I hope that's okay. But there's one last thing that I kind of want to say to your point. Emotional trading to me is trying to reach objectivity or as close to objective truth as you can as a market participant, because you are a part of the market. And so there's this feedback loop between you and the market. Here now we see people kind of saying what they want from the market rather than the reality of the market. And price is the ultimate determinant, right, of what people perceive the value of the space to be. When Bitcoin is at 3,000, it's a scam. When it's at 60,000, it's revolutionary technology that's going to $1 million. Being able to disassociate yourself from that process is part of the emotional aspect of discretionary trading. And that takes time to separate yourself from the market mechanisms that kind of draw you in through greed and all of the cacophony of people that tell you what you should think. And usually it serves their own self-interest, right? Because exchanges want you to trade, VCs want you to buy their bags, and newsletter sellers want you to continue to think it's a bull market so that you continue to subscribe. But you have to really kind of find conviction in yourself through your experience as a market participant and view your failures as moments where you learned. I got incredibly lucky in this market to get to where I am. And it was because no matter how bad things got, in a day or two, I'd usually generally come back and have sort of reset myself and then just start trying to pound away again at the market and trying to improve. And this market will give you incredible opportunities that come once every few centuries if you're willing to take them.
All right, mate. Well, thank you for joining us. I thought Asia started like 40 minutes ago, but maybe I'm wrong. Maybe you've got your McDonald's shift, mate. I won't tell you.
Yeah.
But thank you for joining us. Thanks for coming on. Thanks for chatting. Before you came on, everyone was really excited. Now everyone hates you because you said bearish things. But
yeah,
look, that's just
enough.
the way. That's just the way it goes, innit? That's just the way it goes.
Yeah. I appreciate your guys' thoughts as well. It's been really enjoyable
for joining us.
for me.
Hopefully you can come join us soon once again. And if you let me know where your cabin is, I'll come join you. Or maybe we're going to go sail around the Mediterranean together next summer.
Apparently you have plenty of time to do it.
Got the
invitation.
Down.
Boys, thanks a lot.
Thanks, Light.
Thanks, Light. Let's join us down for a little moment after he's gone, because he's got his shift.
Yeah, that's fine. He's got to go to McDonald's.
All right, he's gone. He's dropped off the Zoom call. So when you were gone, were you letting your family back into the house?
No, I had to get a beer and use the restroom, but I was listening, so I'm now.
Oh, maybe I should get another drink.
I'm now restocked, and
I should have got another drink at some point, but I didn't bother. He was talking a bit about like removing all like emotion, like the pure form of trading is when you can become ultimately completely objective and all this shit. And it made me realize that I actually think there's two types of trading, and it's sort of like Star Wars, where there's two types of Force user, right? There's like the Jedi and there's the Sith. I don't know if they like retconned that a little bit and they changed it in the late ones or in the new movies. Or if it remained the same. Sorry, Mrs. Ann Disk says, stop swinging your chair, it gives me motion sickness. I'm not going to stop swinging, you can please leave the stream. But there's two types of trading. There's like the Jedi and the Sith, right? And like the Jedi is the way that everyone tells you. It's like you've got to strip your emotions from the market. You have to be completely pure and objective, and you have to see the truth, and you have to, create this perfect system of purity and grace, and like that's the Jedi way. And then there's a Sith. It's like fuck it, just like pile up all your emotions, get fucking angry, and you can do way cooler shit. You can do the lightning shit. I don't know that much about Star Wars, so if I'm fucking it up, I apologize. But there's these two camps, and it's kind of the same, right? Where, like, if you're I think there's a bunch of people, and I think that I'm actually in this camp, where I don't, like, get rid of all my emotions. I can't do this, like, beautiful system. I feel like the euphoria, and I feel all the, like, fear and pain, and, like, holy shit, it's actually going to go to zero this time. But if you're a Sith, you can use it to your advantage, and those moments where you're like, holy shit, we're all going to die, you have to lean into the Force and execute your buy orders. And the times where you're like, holy shit, it's going to infinity, you have to lean into those feelings and do the opposite. Whereas the Jedi, I respect the Jedi. The Jedi, they're very good people, the Jedi. Like, everyone's saying the Jedi, they're great folks. But their system's, like, much more mathematical, and I guess they're all what the professionals are and shit. But I think that's way, way, way more difficult just to get similar results. So, like,
I think that the crypto markets, though, the correlations make it to where it's a little more difficult to be the Jedi. You kind of have to be the Sith, right? Because it's so cyclical and correlated. Like, you're just bored out of your mind if you're just only the Jedi. You have to completely leave crypto, but still pay attention to it to know when the trade turns on. But when the trade turns off, there's nothing to buy. Like, what do you buy? You know, like, if nothing's, like, you have to decide to short it, basically, if that's your other option.
Yeah, I just, like, I just realized that, like, loads of people are still watching, listen to Light be, like, very eloquent, very, like, concise and sober and intelligent, and then I'm like, bro, I had this idea, yeah, where, like, trading is like the Jedi versus the Sith. Like, please stick around and listen to my analysis that sounds like a 17-year-old on TikTok who got high and was like, wait, I know how to trade now. Like, it's like the Jedi and the Sith.
No, I think it was fine, like, kind of chaos and order, you know. I don't know the Star Wars stuff, but, like, to me it makes sense.
You like Star Trek, don't you? You're a Star Trek guy.
I read books, man. I'm sorry, like, none of the TV shows and movies do it for me as much.
I reckon you watch Star Trek.
I don't watch any Star Trek. You know, Messi loves Star Trek. He's, like, memorized every line of Star Trek.
Every line ever? Isn't there quite a lot of it?
Yeah, he's a wild man. I just think that there's something I ran into. Light talking brought up a lot of, like, scar tissue for me in some ways, and then also, like, was a good reminder for where we are, just to, like, not try to be too cute too soon. Like, I can't tell you how many times I've tried to, like, buy this market over the past couple of weeks, and, like, sometimes it was fine. Sometimes I just, like, you were joking with me last week. You were like, yeah, I'm gonna fade this daily open, and instantly ETH goes down $100 each. It's like, okay, that was good. And I think the idea that you basically have to have patience, and it's not the same, like, oh, if you don't do this, it'll just double overnight. You know, like, that doesn't exist right now. And kind of understanding the broad temperature of the market is important, where you have a lot more time right now, right? Like, if we, like, hyper capitulate, maybe there'll be a short time to buy the total bottom, but you can buy confirmation and get, like, buy recovery and then not sweat the downside because you're just out. And one of the things that, especially when I was earlier in crypto that I'm over now, like, for instance, I don't have a freaking clue how many Bitcoin or how many ETH I have, right? Like, on a dollar basis. Like, if you take your dollars in crypto and you divide them by $29,577, like, how many Bitcoin do you have? And that used to be a metric, right? Like, it's like, oh, you've got 1 Bitcoin or 10 or 100 or 1,000, whatever.
Wait, are you saying you don't denominate in crypto, you denominate in dollars?
No, I do denominate in crypto when everything is up. But, like, it's a great way to stay exposed while it's going down if you're, like, afraid of losing your Bitcoin relative value. Whereas if you're, like, willing to buy higher, like, I have these alerts on my chart that people may have seen. Like, it's like, I'm not very interested in Bitcoin until it gets over about 33K, right, at this moment. And I can move that down, right, as it dumps. But I have more Bitcoin relative value now than I would if I bought at 33K. So I'm like losing Bitcoin if I wait to buy. But what that traps you into is you're essentially holding while it bleeds. Your Bitcoin relative value is the same, but your dollar basis is going down. Versus if you're more comfortable having less Bitcoin, but you're minimizing your dollar losses, then you can improve, you can have more confident trades in a bear market. It's just like,
Look, I'm just hoping someone in chat understood what you said. I'm going to nod and go, yeah,
Okay.
sounds good.
Okay.
But I'm like hoping that other people understood it.
okay, maybe they did. I don't
I'm
know.
not
it's
going to
just
pretend I did.
that, like, I don't know. It's just a way of my brain is used to
Are
think.
you
more
saying
so.
1 Bitcoin equals 1 Bitcoin?
1 Bitcoin does equal 1 Bitcoin, but like 1 Bitcoin at $30,000 is more exciting than 1 Bitcoin at $20,000.
I agree with that.
So, you know, yeah, I want to give credit. We had them on the show. So Cred and Don, they've been pretty good at helping me like kind of think through from a trading perspective, like where we are in the market and trying to be in a position of strength where you're like willing to buy. And able to buy. You're not like forced into something. You're not wanting to puke your Bitcoin that you have or your ETH that you have because it's dumping and you're not satisfied with that dollar value. But instead, like the chart is telling you it's an okay time to buy. Maybe everything capitulated and you're finally willing to go from cash, or like everything's showing enough strength that you're willing to redeploy. Either way, you're approaching it from a position of strength.
Yeah, I think one thing that I learned quite early that was helpful for me was like getting comfortable selling and rebuying, and like accepting the like exchange fee, whatever.
Yeah.
Because I think in the 2012 through to 2014 period, like I had this like weird sort of psychological like hang up where I thought that it was really important to like to own my Bitcoins, like the ones I like originally bought, like they were special in some way. Like I wanted
that
these
transaction
ones. Like,
ID. Yeah.
yeah, like these ones are mine and I've got them, and if I sell them and I get back less, then I've like fucked it up or something. And like I didn't feel super comfortable like jumping back and forth. I was seeing it like you buy it, you keep it, and like you put it onto one side. And as soon as I felt comfortable jumping between the two, things were so much easier for me, because if I didn't really know what I was doing, you can flip your bias really, your internal bias really easily by just making a transaction and then looking at the market and going, okay, I was like bearish a second ago, but now I'm full cash. I'm like, fuck, I need to look at, I don't feel like that. Like, what if it runs away from me? And on the way up, like in the 2017 market, when we hit 18, 19K, I was like super inefficient in capital, and I kept making small like capital losses because I was selling every single like spike, because I was like, that one was the top. That one was the top. From like 79 upwards, I was like, it must be somewhere fucking around here. So it would spike and I'd sell it, and then either I'd like rebuy on the dip when it looked like it had some strength, or I'd rebuy slightly higher when it broke out again and sell the next top. And in the end, it meant I did all right, because I like faded the entire nuke. I was like, I have sell orders that were like dollars away from the top price it ever hit on the exchange. But like I was super capital inefficient. I maybe lost like 5 or 10% of my balance doing this stupid like sell every fucking time and rebuy. Like getting used to being able to do that and just jumping in and out and getting fine with like testing the liquidity, as Elon put it. It helped me a lot in my unprofessional career, I guess.
Yeah. I think I've been doing more of that this time, like where in this market, it's been a little more painful for me to like just sell it all or buy it all. Like, you know, the dollar amounts of the slippage and the fees hurt a little more than they did when I was more pleb. I'm like still pleb, but I was more pleb then. So like the dollar amount that you lose when you're pushing a large percentage of your stack in an order it hurts. Like just taking one wrong trade, even if there's not a lot of dollar difference in the price of the asset.
Yeah, especially in DeFi and Uniswap where they fucking rip your eyes out.
Oh my god, it's so bad. And I love DeFi, but man, trading any significant amount of money on chain, it hurts. Someone in the chat asked, "How are we navigating the bear? How are you just like comfy in cash? Have spot that you hedge? Do you play the options market? Do you just tell it all to go screw off and you'll come back when it looks fun? What are you doing?"
Sit in cash, wait for a big capitulation, like accelerated selling thing, because I think you can get a plus 30 to 100% bounce after one of those, but it might just be way lower. Also, there's a guy who's banned from the chat on his 100 accounts from this show,
and he's back
who's
in.
actually quite smart, and has like some really great option strategies that he shared with me. He's banned from this chat because he gets like he just like flames everyone. He hates you, Ledger.
Is this the BHM guy?
I don't know if BHM. It's not in Silico. No, it's
No, not him. No, he got canceled the
it's
other
like-
day, apparently.
Yeah, I know what you mean. Yeah, it's him. His latest account was Kang Teal or something.
Yeah, he hates me. He comes on every podcast I do and just calls me an idiot over and over and over again. So
he
Luke
like he
Benson.
does that to all the guests as well and makes the chat like super bad vibes. But to his credit, he seems quite smart and is a pretty good investor, and he has like these option strategy thing, and I asked him what his position was, and like it was like fucking genius, so he just copied that.
We'll tell him to quit being a douchebag and we won't ban him all the time. Like
I've told him to stop being a douchebag several times, and he says sorry, and then he's a douchebag again 10 minutes later. And like I just think that's who he is. And you know what? Sometimes when people have like a spark of creative genius in them, sometimes they have like personality flaws.
I think
and, like, that's fine.
sometimes people look at me and they're like, you know what, Ledger's got the most punchable face. I need to just punch him through these words that I put in a Twitch stream. And I like have 17 email accounts connected to Twitch just so that I can come verbally abuse Ledger some more because I just want to punch him in the face so bad. And I get it. It's a punchable face. But you know what? Just get over it and we'll be all right. All you got to do is quit being a dick and we'll quit banning you. Like you can just talk like a normal person. Anyway. Yeah, it goes for Silico too, except for like, I don't want to say anything bad about him. He does enough himself.
In fear.
Yeah.
In fear of the army. Yeah.
So you said
But you
like,
two fell out as well. I asked Silico to come on.
fell
and
out.
Then
We
you,
never were
then
in.
you two fell out.
There was never anything
We-
in to fall out of. Freaking.
Well, you had like an argument or something straight
I
after I
said
invited
one
him on.
tweet,
So
and then he was like, "You're the dumbest person I've ever seen in the entire world. Like, what could possibly be wrong with your brain to not understand anything whatsoever? You absolute freaking moron! Now I've just owned you, and you're the dumbest person ever because you tweeted one thing ever." That's what he said. And then he like just
Yeah, well, I think it would have been.
on
I
me.
think it would have been a good episode. I think it would have been a good episode, but
not anymore. It's not. He's a psychopath.
all right. Well, can we get Jim? Can we get Jim Talbot on?
Yeah.
He's got cat videos.
Yeah,
He can come on,
absolutely, absolutely.
All right.
Whoever that is. So I wanted to point at the chart, and you said like big capitulation. Like, can you tell me if that's coming soon or not? Because this doesn't look like big capitulation. It doesn't exactly scream a bottom to me.
Yeah, I mean, it doesn't look like a bottom, does it? Because the volume's like, I mean, there's a slight uptick in volume, but it looks dog shit, and it's near the historical bottoms. You're either going to range again, it's going to be like another fucking boring month, or you're going to break this support and you're going to get accelerated selling in the next couple of weeks or so. So, like, it's got to be soon. Like, if we range again and people change macro thesis and like it's going up, and then they change macro thesis again, it's going down. I'm just going to stop tweeting. Like, I'm going to stop tweeting. I can't be bothered. It's too boring. I'm going to, like, pivot to, like, a industry that's going up. Like, I'm going to become a travel influencer or something. Actually,
Yeah.
travel influencers don't do very well for me because I really like staying inside.
Not a lot of industries are really going up though. Like,
I'll become a cucking... No, I don't like cucking either. I'll pick something else. I'll become an influencer of an industry that's pumping. Maybe I need to download TikTok. But
You gotta do little dances though. Can you do a practice dance?
not right now. But
Okay.
I
was gonna change the video back to like.
I'll practice in private. I'll practice in private, and I can do one on the one where you're doing your hot tub stream.
Yeah.
But
I just keep drawing lines on this, and like none of them ever break bullishly. You know, I like put a little line here, like, oh, just break above that. It's easy. Put a little parabola. It's like break above that. It's easy. And it's just like it just keeps dripping down. It's sad.
yeah,
Cobie.
I mean, it's probably the worst chart I've ever seen for Bitcoin. It's like in some of the worst state I've ever seen it. Maybe just because of the lack of bounce, and it is true. Like
Good Lord. Somebody asked if Maddox dead. I had not looked at it, but wow.
okay, maybe. But like here's the thing, right? Like that chart looks terrible. That chart looks super bad. Like it's just been going. What was the previous candles on those?
Hold
Was it
on.
the daily? It's
Yeah,
like
this is
how
the
many
daily.
red dailies is that in a row?
A lot. That's a lot.
That's a lot of red dailies.
I heard
in a
their
row.
marketing
But-
team sent some coins to Binance. 2, 3, 4, 5. That might have been FUD. 7,
Well,
8, 9,
mate,
10,
like
11.
honestly, if I was on the team, I would have been sending the coins to Binance because look at the fucking chart. Like they should have been sending quicker. That's bullish selling because the team is now well funded enough to get through a bear market. That's how you do the propaganda. But if you look at this, which the chart looks like shit, and obviously it's gone down like 90% or whatever, but at least it got a bounce, right? Like it dumped from like $3 to like $1, and then it bounced back almost to $3, and
Yeah,
like
this
at least
thing
it
right
gave
here.
you a complacency
Yeah,
shoulder.
you could have gotten out
to-
at 220.
Yeah, like if you knew it was over, you're like, that's a massive nuke. Normally markets
look at
don't, like
this.
historically markets don't recover from a plus 50% drawdown straight away, or at least 60 or 70% drawdown straight away. So I'm going to sell the complacency shoulder. At least you got a great exit on that. Like you basically got to sell the all-time high for a second opportunity. Whereas on Bitcoin, you didn't get to do that. It's just like there was a rounded top, the bid completely disappeared, it nuked, and then never really bounced again. And that looks super bad. And the reg news flows
Horrible.
Like yeah, like probably the worst ever. Like maybe Mount Gox was worse than this because like at Mount Gox times it was like full doom and gloom. And the only place you could
But that was like
really
Bitcoin
trade.
is literally going to disappear. Is that was that type of news, right?
Yeah. But you know,
What's your worst case scenario for Ethereum?
in on what time frame?
This year.
This year, absolute worst case scenario, like of a probability, of any probability, like including like 0.1% probability.
No, like 10% or above type probability.
10% or above is like 800
Do you see my chart right
yearly.
now? It's
Yearly
the,
open.
The droopy chart. Yeah, I've got a line on the yearly open, and I was basically
Yeah.
trying to draw like a parabola down, like what's it got to do. That would be fun. I don't think that's actually likely. Basically,
But
just
like,
waiting on this.
but then like you think about how like bad that sounds, right? Like 800 sounds like the end of the world. Like holy shit, how could it go to 800? That's so bad. That's the yearly open. Bitcoin's current price is the yearly open. Like that's what, if you only trade Bitcoin, what the fuck? Like that's your reality. Like you're at 800 now. Like you're at ETH 800.
Yeah, like as much as like Bitcoin maxis or people that want to troll me about being a bad trader or whatever, whatever you look at, like I look at what Bitcoin was at the beginning of the year. I turned over my entire portfolio at the beginning of the year, and I'm up many multiples from the beginning of the year. And if I just was in Bitcoin and rode it up and down, I'd be extraordinarily depressed right now.
Yeah.
So like this year was one of the greatest like altcoin dominance years I think ever in crypto. Like it was just 6 months of Bitcoin being one of the worst performers in the market.
Yeah, I mean, Bitcoin's always kind of the worst performer in the market, right? Because, like, in the past, you needed to buy Bitcoin and the denominator for alts was Bitcoin. So you didn't used to have USD markets. They started to get introduced in 2017, and it was like a major change for like older traders like me, where you had to consider this USD market price all of a sudden, and it fucked me up a little bit. I didn't adjust to it fast enough. and before that, like Bitcoin was always the worst performer because everything else was traded against Bitcoin, and you needed things to go up for Ponzi markets to be fun, right?
Yeah.
And in the next market cycle in 2017, USD markets started to get introduced, and USD on ramps, the assets with the lower market cap, you can move them like percentage based more easily. So Bitcoin, like, it did really well versus the others, and but like it was still one of the worst performers. It didn't do as bad as it did this time around. And as people have sort of managed to catch up a little bit and go, right, in a bull market, everything outperforms Bitcoin, they just on-ramp straight into these things now. And you see all these crypto funds being raised by these investors. And if you think about it, in some ways, it's kind of bearish, right? Because like it's billions of dollars that they could just put into Ethereum or Bitcoin.
Yeah.
But like they're not, because they're looking to maximize their returns against Ethereum or Bitcoin, maybe just against Bitcoin. You see, you know, $1 billion raised by FTX. You see all this money that's going into Coinbase. Whereas 5 years ago or 6 years ago, all of those allocations would go into like just straight into coins, which were which
what's
were liquid.
that $900 million that went into FTX in that announcement today? Like, if that would have bought Bitcoin, would that have made an impact on the price?
It probably wouldn't have made a big impact at these points. Like Saylor was able to buy billions and no moved, but it's not just that one instance.
What was that? What did he raise? 500, 600 million, and you couldn't even see it on the chart.
Yeah, it's not that like one specific instance though. It's like there's tons of these things happening all at the same time, right? There's like that 500 million so rare, whatever it's called, football NFT shit happening, and like multiple billions are done in VC raises into speculative stuff because they're trying to get Bitcoin at $10, right? They're not trying to buy Bitcoin at 20k or 30k.
So one of my thoughts for the rest of this year, because I agree with you, I think if we get a big capitulation, it gives you a plus 50%, plus 100% type of move, probably on altcoins, but maybe even on like large stuff. One of my thoughts is that from 32, we could both hit 24 and 42, or 30 for 33, whatever we were at, where it was basically an equidistant move in either direction. Do you think that that's possible? Like where we dump down to 24, 20, and then still like work our way back up to high 30s or something this year?
Yeah, I guess like you dump from this place, right? If you hit, it depends how low it goes with this dump, I think. Like if it's a slow bleed down and it like, you know, it takes to the end of the year to make it to 24, the end of the year to make it to 20 just really slowly.
Oh, that would be really brutal.
Just like you just extrapolate that linear sort of like slightly diagonal fucking line.
Yeah, this
it would be like that would be so boring. If you get accelerated selling and you hit like a 24 level or a 20 level, I think you could see a massive like recovery where people get the bull hope again and be like, it's not over. Maybe even up to like higher than people expect, and like really trick people into thinking like the bull market continues. But it really depends how it plays out, what it looks like.
Like
I would probably fade that.
That's why like the bullish dumping meme is real in my opinion, because this, from a percentage perspective, let's say we don't even get to previous all-time highs, you go from 24 to 42, you're 75% up, you know, just on Bitcoin. So like the multiples that your DeFi reflexivity trades go up could be severe.
I think this is where the like real compounding your bags happens, and like why like I tweeted that thing about HODL, the HODL meme in 2018. It's like in a bear market, in historic bear markets, if you zoom to the Bitcoin chart or Ethereum chart and zoom to the left, I think Bitcoin's probably better. Go Bitcoin chart and then go back in time. There was a ton of opportunities in a bear market where you got like a 3x or something. Like you did the initial dump on Bitcoin when the bubble popped, you got to double your money from 10k to like 18, 16, 17k or whatever. And then it dumped again to like 9, and then 9 went to 12 or 13, and then it went down to 6, I remember buying at 6666.66. I was in a restaurant and I saw it, and I was like, all right, that's it. I bought it on my phone, and it like doubled. I went to 11k or so over the next like couple of weeks, and those waves where you look at it on a daily chart like that, and they seem like relatively clean. They're pretty big moves. You can take decent directional positions on them. I think those are the real ways to like compound. If you're not like a incredible trader, just like take the easy trade. Like when it's going down, accept it. Like position appropriately. When it's going up, accept it. But don't trade like the 30-minute charts, or you know, like if you zoom into the middle of one of these positions where it's clearly trending, like on this daily chart, it looks like it's a straight line up or a straight line down, and then you look at all the wicks inside there, and you can imagine how many people got liquidated or chopped up in this, like if the time frame was shorter, like on the 30-minute chart within just that sideways there, or within the uptrend. So many people are like, yeah, so many people are flip-flopping and losing their entire bag on stuff that when you zoom out, you can't even see it on the chart anymore. And like that's what's depressing, man. Like you're not supposed to get liquidated on where you can't even see the impact on the candle. Like if you get liquidated on the massive crash, that's cool, because you can be like, that was me. You see that big red line? I was there. I contributed to that. If you get liquidated in this sideways shit, or in like a slight trend,
Yeah, it's just depressing.
like it's just sad. It's pathetic, dude. Like if you're gonna go out, you gotta go out in a blaze of glory and get liquidated in a way where it's like, look, yeah, everyone respects that. Like, could have happened to anyone. Just getting liquidated on a sideways 30-minute chart where you can't even see it, it's like, it's sad, man.
That's way too high of a margin as well. Like, I reduced these to, I don't know, what I would consider, you're definitely not buying the bottom, but you're exposed when it starts to bottom, like starts to show some kind of green candles. 50%, 40%, 25%. The moves got progressively smaller as the move went on, or as the bear market went on. I remember at this time, in this, it was miserable. But when it actually broke down here, I was actually happy. I was like, well, it's finally trending. You know, like we're probably marking a bottom. There's something that you can do. So it's like relative basis, or a non-relative basis. Maybe I'm poorer, but I can actually trade when it gets out of this. So sometimes you just run out of any ability to trade it. And I think that's somewhat what we've been in since mid-June. Like, this is just hard to trade. So even if we break down, it's almost a relief. And then I know you don't like the moving averages and stuff, but I do like if you look back at where we just were, so many times it just got rejected off those high time frame type of moving averages, and price goes back to them. Yeah. But right now we're at a deviation from those moving averages, so therefore you can assume price goes back to them, whether they move down or whether the price moves up. One of the two is going to happen. So eventually that gives...
that moving average always seems to catch up with the price somehow. It's like it's like spooky magic.
It's almost like it's math. But point being, like when you're heavily deviated from them, it gives you the opportunity to move to them in some capacity, whether it's price or moving averages that moves. If that happened today, it'd be a 40% plus move. And if it happens from 24K...
Stream's rugged for me, by the way.
What's that?
The stream's rugged for me, by the way.
No, it's fine.
All
it's
right.
just you. But if it happened from 24K or something, it's upwards of like 70% to get to some kind of high time frame like that. And I'm not... I mean... to get to where we are today from 20K would be a 50% move. So at some point, there's going to be buying opportunities even in a bear market. I just want to give people a little bit of hopium that if you find yourself in a position of strength, even in a bear market, there will be opportunities to increase your dollars and Bitcoin, whichever way you look at it.
I'm going to use this bear market to like actually learn how options work, because like the start of the bull market, I killed it on options and I thought I was like a genius god, and then I just gave back all my returns by thinking I was a genius god when actually turns out I remained a moron and I just made a lucky trade. So I need to do way more learning, because I think that's how I'll probably trade from now on.
Yeah, I wish we had better.
Oh yeah, you can't, can you? Because you're
better access to
you're
crypto options. I like them
regulated out of
for legacy.
opportunity.
Like I've been short a calendar spread in legacy on AMC, and you look at a candle like today, and actually I made money today on AMC, even though I'm short. It went up 24%, and that's one of the things. Like options give you a lot of capacity to do different things. So like you can be short overall, but in AMC I'm actually short. I'm long until August and short until December. So like a calendar spread is what I do there. So it dumped too fast for me. And if crypto had more options like this, it would be nice. You can do it if you're not in the US. Deribit's a pretty good options platform, but if you're
How
in the
come
US,
you can trade options on AMC, but you can't trade crypto options?
because
what's that about?
I can trade options in a traditional account, but there's like the derivatives platforms like FTX has options, Deribit has options. They just say no Americans outright. I think I could trade Bitcoin options on CME maybe, but not be open on the weekends, and the volume sucks. So you just don't have as much flexibility.
So crypto companies' regulatory strategy is literally just like, don't let the Americans in.
Pretty much, yeah. Like basically,
I like
there's
that.
nowhere.
That's cool.
Yeah, there's nowhere good for Americans to trade crypto. So
FTX will figure it out.
I think actually, their whole 8% lending thing that they got going on right now, I think they are actually fueling their margin lending, because you can do margin as an American, but you can't do perpetual swaps. But they need all these people depositing their coins on Blockfolio so that they can then open up and say, hey, we've got like X billions of dollars available for margin trading to Americans on FTX US. So I think it's all a big methodology for them to get liquidity on FTX US. That's my thought.
All right. I'm going to go play some League of Legends because it's 2 a.m.
Yep. Thanks everybody for being here. On that note, let me find oh crap, I wasn't freaking prepared, Cobie.
You got to do your outro. Can you do it this time in a British voice?
All right. Gonna need everybody to go to weekly open. I said weekly open again. uponly.tv/blockfolio. Make a trade today. Capitulate your bags. Thanks for being here once again. uponly.tv/blockfolio.
What the fuck is this?
In it all right, mate. See you next time. Bye bye.